A $42,000 bonus lands in your bank account. You're celebrating. You're already planning your next vacation. But then a friend calls. She says that bonus might cost her family her health insurance for the next year. Sounds crazy, right? Let's talk about why that happens, and why the answer is far more complicated than simply yes or no. Here's the core mechanism, and it's been this way for years. The Affordable Care Act subsidy, or tax credit, is calculated based on your household income. It uses a sliding scale. If your income is lower, you get a bigger credit. If it's higher, the credit shrinks. If your income spikes suddenly, the credit can vanish entirely, or worse, you might end up owing the government the difference if you claim too much. So, let's run with your hypothetical scenario. Your wife makes a steady $30,000 a year, and she's eligible for a significant subsidy on her health plan. Then, her employer gives her a $42,000 signing bonus for a new project. That bonus counts as income for the year. Her total income jumps from $30,000 to $72,000. That sudden increase pushes her well above the income threshold that qualifies her for the maximum subsidy. Now, here's where it gets dangerous. You file your taxes, and you claim that massive subsidy based on your expected income. The government approves it, and you're set. But then, come April, the IRS sends you a letter. They say you actually overpaid the subsidy because your real income was higher. You have to pay back $42,000 minus whatever you actually owed. That's a net loss of money, plus a headache you never wanted. You might be thinking, well, I'll just return the bonus. But wait, what if that bonus was tax-free or non-taxable? Or what if taking a loan to replace the bonus creates other tax complications? The real problem isn't just the bonus itself. It's the uncertainty. You don't know exactly how the IRS will view that lump sum until you file. This is exactly why people end up in these sticky situations. They see the money, they assume it's all good, and then they get hit with a surprise tax bill. There's no universal rule that says you must return a bonus. There's no one-size-fits-all answer. The outcome depends entirely on your individual tax situation, your filing status, and how your income breaks down throughout the year. Some people might be better off taking the loan their friend mentioned, keeping the bonus, and paying it back later. Others might realize that the bonus was a one-time gift and just accept the tax hit. There's no magic bullet. The only way to know for sure is to run the numbers carefully, possibly with a professional who understands self-employment income and irregular earnings. The lesson here isn't to avoid bonuses entirely. It's to understand the tax system before you celebrate. If you're self-employed, or if you have a variable income, a lump sum can look very different to the IRS than it does in your checking account. Always think about how that money will be classified before you spend it. If your income stays consistent, a bonus is usually fine. But if you're unpredictable, treat any large influx of cash with caution. Don't just assume the subsidy will survive. Check the math. And if the math doesn't add up, maybe the best move is to save the bonus for a rainy day, rather than risking a tax surprise that could undo your health coverage plans.